my friends, we're going to keep this rolling right along. This gentleman and I were backstage figuring out how one of us was going to dance out to this intro. So with no further ado, Bradley J. Nattrass, Chairman and CEO of Urban-Gro. How are you, man? No dancing this time around. Yes. Maybe afterwards. All right, I'll let you get to it.
Thank you. Thank you very much. And congratulations, Patrick, on a great event. It's nice to be back in person. Sure. Hi, everyone. My name is Bradley Nattrass. I'm Chairman and CEO of Urban-Gro, an architecture, engineering, and cultivation design company that's integrating equipment systems into high-performance controlled environment ag facilities around the world. Earlier this year, in February, we uplisted to the NADSAQ. Our symbol is UGRO. You'll see it on all the slides. But it was really a game changer for the company. It was tied to a $62 million raise. So we have a lot of momentum right now in the marketplace, the global marketplace, and excited to tell you more about it today. So with that, I'll get started. We are based in Colorado, have offices in Georgia. We're in our 8th year, and we have over 80 employees right now and growing fast. Out of those 80 employees, approximately 2/3, or a little over 60, are what we refer to as experts. We have a variety of architects, interior designers, lots of engineers, professional, mechanical, structural, electrical, plumbing engineers, and then a group of horticulturists and plant scientists who have over 15 years experience of growing a multitude of crops. It's these individuals and the fact that we've worked on over 450 controlled environment ag facilities, that's what sets us apart. That's what's driving our organic growth as we expand with current clients, and it's what is helping us meet new clients and grow with new clients on a global basis. Over the last 12 months, revenues of just over $42 million. We recorded our 4th consecutive record quarter in Q2, revenues of just under $13 million and $1.3 million of net income. The next number is really important when following Urban-Gro. Backlog to Urban-Gro, signed contracts with deposits in hand from clients, but they haven't shipped yet. We recognize the revenue when the product or equipment ships, and that usually happens about 1 to 2 quarters after quarter end. So at the end of Q2, we had $27.9 million of backlog. And then finally, tied to that uplisting, we paid off our debt, and we entered Q3 with a cash position of just over $50 million. Urban-Gro in the future, we're working hard to become the leading provider of turnkey solutions to the controlled environment ag marketplace. And we're participating in 2 really hot sectors right now, cannabis and then also food-focused vertical farming. As you can see on the right side of this slide, all markets are very, very strong and increasing on an annual basis. Cannabis, $42 billion by 2025, and that's just the US market. In Europe, it's a blue ocean right now, forecast to exceed or meet $4 billion by 2025. And then in food-focused vertical farming in the next 5 years, it's forecast to exceed $13 billion. We're growing organically, as I mentioned earlier, working with existing MSOs and single state operators, MSOs as they expand within their states and outside of their states. But apart from that, we're also focusing on 3 key areas of growth for the next 2 years. First is growing our high margin services business. The second is global expansion. And finally, the third is entering the food segment in terms of food-focused vertical farming. Starting with services, I'll dive a little bit deeper. Urban-Gro today, with those 60+ experts, we're involved with our clients for the life of their grow. About 12 to 18 months before a facility is operational, we're meeting with them and we're talking about process flow, how people, product, plants will interact with each other in the facility. We're talking to the cultivators and clients about what they want out of the facility, not just at the startup, but also 1 or 2 expansions into the future then we're bringing it back to current state, making sure that we're maximizing space and providing a facility for the client that will maximize yields for them and, of course, strong returns for their investors. After that stage, we move into architecture. We then move into the mechanical, electrical, and plumbing. Combined, those two is full set of construction documents. We then revert back to the horticulturists, and we're designing the guts of the grow, the flow of air through the facility, the flow of water, depending on the local regulations, how should that wastewater be treated? We are focused on the lighting plans, the mechanical. We've become experts in controlling environments in these facilities. Once that's done, on the custom equipment systems, our engineers are working closely with manufacturing partners, and we integrate, sell, and then our commissioning engineers go on site to ensure that the staff's well-trained and that the equipment systems are operating as they should. Finally, for the life of the grow also means once a facility is operational. Our branded program, Grow Care, focuses on utilizing our experts for ongoing training, remote monitoring to ensure they don't have to battle environmental issues, maintenance of assets, and then finally looking at optimization and areas of optimization, making recommendations on how they can even become more efficient going forward. So by far the most exciting development for Urban-Gro since uplisting to the NADSAQ was the acquisition of an architect firm, 2WR, and their cannabis-focused arm, MJ12, about 2 months ago. It's a 23-person award-winning firm based out of Colorado and Georgia. And it now not only allows us to engage with our clients 3 or 4 months earlier than we were before, but it's allowed us to take one giant step towards that ultimate goal of providing the end-to-end turnkey facility. At the time of the acquisition, they had 70 open projects in the space, in the US market. So we've been busy focusing on integrating in cross-selling, integrating in our services and equipment systems wherever possible on those projects. The guidance that we gave when we announced the acquisition at the end of July was revenues of $7 to9 million and EBITDA of $1.5 to 2 million in the 12 months following the transaction. And then on the cross-selling side, at the time we mentioned $10 million in incremental revenues tied to cross-selling, but that's a very, very conservative number. So moreover, this acquisition, it brings Urban-Gro now the capabilities to offer our clients dispensaries with full architecture and engineering, processing kitchens, extraction facilities. So it really, again, takes that step towards the end-to-end solution. And finally, what I really respected about MJ12 and how they design, as you can see in the pictures here in the upper left, a cultivation facility doesn't have to just be a box. You know, in the upper left, it was in transitional neighborhood, inner city, and there's street art on the side of the building. The bottom two here are dispensaries that they had designed as well. Last week, we announced a really exciting division of the company, Urban-Gro Financial Services. It was launched in response to demand from our clients. We consistently found that our clients, the last 20–30% of the raise was the toughest for them. And so with Excess Financial Group, we now have the ability to offer our clients lines, $5 to $20 million lines, non-dilutional CapEx lines. Personal guarantees not even required. And so that's going to make a big difference for our clients, big difference for Urban-Gro as the equipment flows through us, and a great opportunity for our recurring revenue service program, Grow Care, because we will maintain those assets on the back end just to make sure that Excess has great operating equipment that they've put a lien on, obviously. Moving into the second area of growth for Urban-Gro, global expansion. And when I talk about global expansion, first step for us is the EMEA region. It's Europe, Middle East, and Africa. And for cannabis, it's Europe. And for food-focused vertical farming, that's when we're starting to make our ways and work on opportunities in the Middle East marketplace. Hard during a pandemic to, of course, expand overseas. And so we had to get creative. We hired a couple of commercial agents about a year ago. That really gave us a nice head start. Started to meet clients in a variety of European countries. Actually completed some work on the design side from afar. But as soon as the market opened, we were over there. I've had 3 trips in the last 2 months with teams over in Europe. We hired a vice president of horticulture who has a very strong background in the EMEA region. And we're in the process now of opening our European entity and beginning to expand more aggressively. From a trade show standpoint, trade shows were really key to Urban-Gro in the first 3-4 years. It's when people were whispering cannabis. But it was a place for everyone to go and talk openly about the industry. That's where the European market is right now. So about 6 weeks ago, we were in Berlin for an international cannabis show. And then about 10 days ago, we were at Green Tech, one of the largest horticulture shows in the world, where we not only exhibited, but I also sat on a panel with some other leaders focusing on what can we learn from expansion in the U.S., what mistakes were made so they're not made overseas. And it's on these trips that I've realized there's a tremendous demand for the solutions that Urban-Gro is providing to the marketplace, and there is relatively few entrants. Our IP, those 60 individuals, our IP travels very well, and we're very fortunate for that. Moving into the third area of growth, diversification into food. In 20, we conducted a study internally, and what we learned is, regardless if it's cannabis in an indoor controlled environment facility, or if it's leafy greens or herbs in an indoor vertical farm, it's the same architecture, it's the same engineering, same design. It's all about perfectly controlling an environment. The only difference between the two is the logistics or the benching or container systems of how you move that crop throughout the facility. But all the other equipment systems, they were born in horticulture. And so it's been a nice, easy transition for us. We're making great progress in the North American market and also in the European market and Middle East as well. And exciting, I'm sure we'll announce some exciting developments in the quarters ahead. Moving on to financial highlights. Our public markets peer group, ancillary companies trading on the exchange, predominantly the big boards, they are trading right now from an enterprise value standpoint at up to 12 times their trailing 12 months revenue. Urban-Gro right now is right around 2 times. In my opinion, a great value, great opportunity. At the entering Q3, we had a cash position of over $50 million and no debt. And while talking now about backlog again, we entered the year just under 15 million in backlog. And as discussed earlier, we're now right up around 28 million going into Q3. So really a great demonstration of the momentum that we have and preparing us for future quarters. We finished Q2 with 1.3 million of positive net income and a record 12.8 million in revenue, and 4 consecutive quarters of record revenues, backlog, and adjusted EBITDA. Diving a little bit more into that and looking at the chart, because it's much easier to see the momentum visually. Apart from a little blip in Q2 tied to the pandemic, we really, after that raise, started executing perfectly, growing our team. We have right now 10 job recs out for architects, engineers, and sales execs to manage the demand. So our momentum's growing, and I do not foresee any change in that momentum growth. Second chart shows, apart from last year during the pandemic, income from operations positive for the last 2 quarters and positive adjusted EBITDA for the last 4 quarters. And I'll take this moment to add in, we actually filed this morning pro forma financials, looking at the acquisition of the architect firm and what we would have looked like in 2020 if we had owned them, and versus what we actually looked like. So we had revenues in 2020 of 26 million. Had we owned the firm in 2020, we would have done 32 million. We recorded a negative, an EBITDA loss, adjusted EBITDA loss of 600,000. We would have had a positive 400,000. Our percentage of revenues that are high margin services based were less than 10%. They would have been more than 25%. And finally, gross profit, 22%, would have been 26%. So, exciting numbers when you look at who we are now versus where we finished last year. And at our upcoming earnings call on November 9th, about 30 minutes after market close, we'll have about 2 out of 3 months of the 2WR numbers included in ours. So looking forward to that call. Moving to the balance sheet, very, very strong. A cash position of over 50 million. We don't have it on here, but our inventory levels, they're not huge. We're not a manufacturer. We don't intend to be a manufacturer. We want to work with all manufacturers, a variety in each product category. So in those high dollar mechanical and environmental control systems that are custom built by our partners, they're built and then they're shipped directly to the client. So we don't have to tie up our cash buying inventory and taking positions and having materials on hand. Our cap table, also very, very strong. 10.5 million shares outstanding. About a third of that amount is held by insiders. After our second quarter, which was our full quarter that we reported once on the NADSAQ, we had institutional ownership of a little over 14% of that, 14% at that time. So looking forward to the upcoming 13 F filings as well to see how that hopefully is increased. So overall, Urban-Gro, we are at the right place, the right time, the right value. We're in 2 very, very attractive and strong sectors, cannabis and also food-focused vertical farming. We are rapidly expanding globally to take advantages of the opportunity. It's not hard for us to expand globally because our IP travels very, very well. And really looking forward to the earnings calls ahead and delivering results for our shareholders. So thank you very much for your time, and I will open it up for questions. And after that, I'll be over at table 42 next door with our EVP of Corp Dev, Dan Droller, if you have any further questions.
Thank you. Thank you very much, Brad. Any questions for Brad out there? Brad at Urban-Gro. All right, I'll start with one, Brad. We probably have time for this one. So this equipment financing solution seems like the next natural, logical step for you guys, right? What I'm curious about is whether it was client-driven, in terms of providing more value to the companies you're working with, what the impetus for that new solution was.
No, 100% client-driven. What we were finding is at the tail end of their projects, there would sometimes be 1, 2, 3 month delays as they were working through their financing alternatives. And since they had made it that far, they were unfortunately having to sometimes take some dilutive financing that was very expensive. This is a non-dilutional opportunity for them to get to market quicker. And getting to market quicker, especially in new states as they open up, is key, because you want to be operating when the price of cannabis is at its highest.
I really appreciate that, because to me, what that says is that you're communicating so well with your clients, right? That you're understanding their needs and you're able to innovate new products specifically for them, right? So good for you. Congratulations on all you've built. You guys, again, Bradley Nattrass from Urban-Gro.
Thank you.
Thank you.
Thank you. Appreciate it.